Good morning, everybody, and welcome to a special edition of Bleeding Crypto's market update. This update is actually going to be done on the Dow Jones Industrial Average Index versus my normal updates that I do on a daily basis of Bitcoin to my group. So this one I'm going to publish on Twitter as well, just so that you guys could see if you find this interesting or not. Most people that follow me have seen how the gaps have played out in crypto. Now, gaps are not something that is only for crypto. All the tools that we use in crypto are actually borrowed from traditional markets. We can incorporate those into Bitcoin and into crypto because the same properties still apply. The power of gaps is something that most people that follow me have come to believe when they see how well they react to price action. Now, you have to understand what a gap is. A gap is basically a magnet and a marker left behind by market makers. And I go in depth into that in my training module that I have available for my members. But just to give you a quick synopsis of gaps and what we're looking for here, back in 2019, excuse me, 2009, we put a tweezer bottom reversal right here, March, the week of the 16th, and we started going up. As we started going up, we left several markers here, these gaps, which each one of these purple lines is going to represent a gap on the weekly time frame. There are different gaps on different time frames, and again, I go into that in my training module. But just for the sake of this video, I'm going to try to make it as simple as possible to not make it too confusing. So on the weekly time frame, as we were going up, we left these markers, these weekly gaps here, and as you continue up through the past 10 years, we continue to leave markers here, 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 on here, all the way up till we reach the top. From that point on, as the price action started to drop, we started to fill these gaps. Now I'm going to zoom in to give you a visual of these gaps so you can understand what I'm referring to when I say gaps on the price action. But before I do that, in case I can't line this up too as nice as it is now, I just want you to see a couple of things before I zoom in. So if we do our fib from the reversal back in March of 2009 to the top that we put in last month, well, the month of February, better said, you're going to notice that the golden ratio, 618, lines up really, really well with this prior area of support and resistance, which is one of the things that you want to look at when you're finding support and resistance. I like finding confluences between my gaps and other tools. I don't strictly trade just using gaps. I use gaps as part of my arsenal of tools to help me understand where price action may be going. And of course, people who understand TA know that no indicator is 100% accurate. All we do is deal in probabilities, and we try to use as much data as possible to help us get the most probable outcome. And even then, it sometimes doesn't go our way, and that's okay. As long as we could have more wins than losses as a trader, that's basically all we want. So this gap line here is the last gap line above the golden pocket, golden ratio. So I really would like to see this retracement fulfill at least 618. Currently, we have retraced to 382. Some people on the stock market, I read an article today, they're calling the beginning of the new bull market. Anyone in crypto who understands TA can tell you that 382 is not a proper retracement for any type of asset, let alone something that has been running for 10 years on a pretty much almost parabolic move here. I mean, it's been really, really bullish for the past 10 years. So to believe that we've come down to 382 and that's all we're going to retrace, that's all the profit taking that's going on, and we're going to continue into a new bull market is pretty far-fetched. Could it happen? Of course it could. Is it likely? No. As analysts, that's what we have to decipher, the likelihood of something. What is the greatest probability that we are going into a new bull market, into the Dow Jones, or that we have more blood to shed? Personally, I believe more blood to shed. So when I make these weekly gaps here, I'm looking for a confluence between a tool that I really have a lot of respect for, which is a Fibonacci, and to see how it lines up with my gap lines. Now, the key areas, entries for Fibonacci are 236, 382, 618, 786, 886. This 706 is not an actual technical Fibonacci level, but it's a level that my buddy Chingus X turned me on to last year, and I use it, and it's been very, very accurate in crypto. So I adopted it on my tools. The 0.50 is not a Fibonacci level, but it's a level that actually the Dow Jones um, adopted, and they've incorporated that into the Fib tool. If you do some research on the 0.50, it was actually called the Dow Jones uh, marker, or something to that effect. I researched it a couple of years ago when I did one of my training modules. So it was interesting to see that this was actually adopted by the stock market, the 0.50, but it's not technically part of the Fibonacci sequence. However, most traders use it, not only in the stock market, obviously since it comes from them, but in crypto, we use this a lot, and it's pretty accurate. And if you look at this drop where we found support, right there, before we had the dead cat, what I believe is a dead cat bounce, we bounced off the 0.50. So that's pretty interesting to see how these levels get respected time and time again in crypto, as well as most of you guys who are in this space are new traders uh, coming into crypto. So looking further here, there are gaps to the downside below 618. So we've got gaps all the way down to $8,743. Could we get there? Of course we could. Depending on how the world economy recovers, how this coronavirus is going to be spreading, and how we're going to contain it, anything is possible. But for right now, I like taking it one step at a time. That's how I approach my TA. That's how I approach the TA in crypto. I don't like getting too ahead of myself, even though I like having an overall, an overall view of what's going on. I like hitting each goal at a time, assessing where the market is at that particular target, and then reevaluating whether are we going to continue to go down, or is the probability that we're going to continue to, or we're going to turn around, better said. So for me right now, what I am looking for is the 618. I want to see a minimum retracement to 618 before I start calling anything further to the downside. And again, these gaps are not 100% guaranteed to fill. But most of you who have followed me have seen how powerful they are. And to give you a number, as an analyst, most people like having percentages. There's a 90% probability based on facts that these get filled. So just to give you just a sense of what I look for when I do my gaps on crypto, and when I post the charts on Twitter. So what I'm going to do now is I'm going to just open this up to help you understand what I meant by those gaps. If you zoom out in here, you will see the spaces left between this candle and this candle up here. There's a space. That space is what I call a gap. Each one of these purple lines represents that space. Some of these spaces here I did not mark because they were already filled. So what I try to do is go to the outer edge of this market structure and find the gaps that have not been filled prior to this dump, just to give you a visual of how they got filled. I didn't incorporate these again because that would just put so many more extra purple lines, and I'm trying to make this as simple as possible. But if you want to, take some time and look at these gaps here. It was filled with this one here. Look at this gap here. It was filled with this one. This gap here was filled with this candle. This gap here was filled here, and so forth and so on. You can go ahead and do that on your own. But for the purpose of this video, like I mentioned, I grabbed the outermost gaps that were not filled prior to this dump, just so we can analyze what happened here. So the last gap that was left behind on the move to the upside before we actually started to drop, we technically started to drop here on the week of the 21st of January. So we had a gap there. We came down and we hit it as support, and then we checked it as resistance. This is something that you will learn if you take those who have taken my gap module will understand this very, very well. And then we broke above it, and this is where we actually just maxed out at the high on this was 2,900, excuse me, $29,568.60 was the top of this candle. We came back down, we checked it as support, then we just started to drop. You will notice that there are gaps to the upside. Yes, we can leave gaps both ways, not only to the downside as well as to the upside. And these will eventually get filled as well. But again, for the purpose of this video, I didn't want to um, overly bear this chart with a bunch of different purple lines and different indicators. I'm trying to make this as simple as possible, and I'm going to update this video when every gap gets filled, or at least once a month, whichever comes first, just to give you guys a sense of where we're at and help you understand that. And I'm also going to post it publicly on Twitter so that you guys can follow along, even if you're not a member of my Discord. So as we dropped here, you can see that we filled it here. We filled this here. So I marked it here. If you notice on the center here of this line, I marked gap filled. We continue to, on this particular drop, we filled 3 weekly candles pretty much all at once, which normally doesn't happen that way. Gaps usually will have different properties and different use cases before it fills that, again, I cover in my module. So we left another gap in here. We came back down here. We filled this gap, but we did not fill this gap here. The wicks do not count. We want to see the body of the candle is what actually fills this wick. This was price action at one time, left a shadow. We didn't actually fill it until we closed. Remember that when a candle opens and closes, there's a lot of things that can happen. So until that candle closes, we don't know what this candle is going to respect. And what I mean by that is we may have a support line that we draw, and when it crosses down, we can say, okay, it was broken at the moment it was broken. But if we still have 5 hours, 6 hours, 7 hours or in this case, a weekly candle, 2 or 3 days left, we don't quite know if it's going to actually act as support until that candle closes. Once that candle closes, we can assess exactly where that candle landed and what it did. And in this case, it acted as support. In this case, it didn't. And if you continue to follow down here, this was the last candle that was closed, that was filled on the weekly time frame, which is at $23,420.80. As we come down further, we left these gaps here, but we didn't quite, excuse me, let me pull this up just a little bit here. Since this candle opened to the downside lower than this wick here, we can consider these here filled, which I have to update these here. These filled because the current price action is lower than these gaps here. Even though we have this space here where we cannot physically see that it closed, these are considered closed. So just to back up just a little bit for you to understand, prior to these candles opening, we had this wick here. This wick, the price action on the closing of this was at 23,172. This gap is at 23,048. 2262, excuse me, 23,062. When the next candle, when this next candle opened, it opened at 20,917. So this closed on the opening of this candle. This candle could have very well opened right here or close to it or above it. So technically it would not have been filled. So since this opened much, much lower, these are technically already filled. So are these, so are these, and so are these. Now, this one here acted as support up until this candle closed it and turned around, and this is where we had our dead cat bounce, but we did fill it here. Now, what is left unfilled? Here's that bounce off support off to 0.50. Now, if you notice, this gap here has not been filled. So we still have room to the downside to fill this gap and hopefully hit the 618 and see if we can close the gaps below 618. Like I mentioned earlier in the video, I'm looking for a close. I'm looking for at least a retracement of 618 for the Dow Jones, but it does not mean it's going to stop there. I just like to see um, these levels get respected before anybody starts calling reversal or bull market or the beginning of a bull market, like Business Insider reported today on Twitter, which I think is I think it's really irresponsible for people to be doing that. But um, being in this space here for a few years, nothing surprises me anymore in how crazy some people can get and how overly biased some people can get, rather than just looking at the facts and just going by emotion, which is something that many of us see that on a daily basis. Some people ignore facts and TA because they are underwater severely and they really want to push that bias so they think that they're going to turn around the market if they scream loud enough that things have reversed. And that isn't usually the case. So these are the gaps that will be left open. And I have reminders to the downside that I'm going to be implementing on each one of these gap lines so that when we do touch these gap lines, I can give you guys an update video once these get filled and post that, like I mentioned before, on Twitter so you guys can follow along. Thank you very much, guys. I hope this made sense. And again, this is just part of one tool that I use. I use different tools that I know sometimes are a little unorthodox. People are not familiar with them, so they discount them as as voodoo and you're crazy, and I get all these comments on Twitter until they prove that they work, and then all of a sudden people become big fans and they send me DMs saying, hey man, I apologize for calling you a nut. I can see how powerful they are. Where can I learn more about them? So it's funny to see how people's minds change. Believe me, I had the exact same reaction when I first learned about gaps. So I don't blame you guys at all. I rather just let the market do its thing, update you, and then you can see for yourself how powerful these gaps are. I hope you enjoyed the video, guys. Have a good day.